This conference will now be recorded.
Okay, good morning. This is Fadi Hamsi. It's Wednesday, March 10th, 2021. It's about 8:40 a.m. Eastern. A couple of housekeeping items. If it's Wednesday, then it's open to all. Morning briefing. We're doing it 3 times a week: Monday, Wednesday, and Friday. We're posting it again after the post processing on our YouTube. Best thing is to subscribe to this. It's very easy. You can subscribe, and this way, when there's a post, there is alert that you get. We have about, I think, I don't know how many are there. Here we go, 1.18. Oh wow, it's growing. Yeah, we're at 1.1 beginning of the year, so that's not bad. About 80 subscribers. Yeah, organic, very organic. Moving forward. Okay, the cover is the same. I'm saying the format is the same, but the cover changes. We have my office, my new office, of course, an undisclosed location. The performance on the Timer Digest, market timer of the decade, and then also the current picture of our performances for PMT, and that's going to go in there too. All right. Aside from that, we're going to have two changes. We're going to have a webinar on PMT, which we need to do in depth, and we're going to do one on expert, happy expert, which has to do with the inclusion of what we've done recently. That's been phenomenal. Mixing what do you call it? The happy expert. This has this part that has to do with DMZ. These two lines, the DMZ, and now we've added ATR to it, and it's been a killer in terms of managing risk because of the way the signals come in. I think that's going to be a very, very busy webinar. Welcome everybody there. We've just been hesitant because we want to make sure that it's battle tested. Enough scenarios, yeah. And we're using it on a 5-minute chart, so you have a lot of scenarios each day. But the more we get under our belt, the better it is. One of the problems we've seen with the financial engineers, including yours truly, is that we do not test things enough. As you get more mature and more in setting your ways, and you're not looking for the next carton of milk, time becomes of different value. You don't push it. You actually work on it to make sure you understand what you're doing and giving the right message. Okay. All right. Let's go to a Econ Calendar. Oh, we're getting a lot of requests for a special. We will be looking at that. I just haven't got there. Too much on the table. I'll get to the specials too shortly. Yeah. And we'll send some things out. Maybe this weekend. No promises. I'm actually just picking up a huge project for one of the leaders of the largest exchange. I'll leave it at that for privacy reasons. One of the leaders of largest, I should say futures exchange. Okay. Futures exchange, yeah. And just heard what I've done. Gets time and digest. Boom, boom, boom. Rest is history. So that's been very, very time consuming. Has to do with agriculture, ags. And I don't know anything about ags. I'm an index guy. Yeah. I understand. I'm a financial analyst by training, and then technical analysis for trading. But I understand management, balance sheet, and products. Where does ag fall into that? I have no clue. I'm legally blonde. Yeah. So let's move here. Let's go to Econ Calendar. Oh, okay. We just got CPI that came in. It was in line, and you saw that 80 handle right on NQ. Absolutely beautiful. Basically, what it said is we're in line. Bond vigilantes quiet. Okay. Very emotional environment we're in because we're vol is high. We're going to get into that. Vol is high, so is a overall marketplace. Tomorrow's a jobless claim. We'll look at that. Today's EIA. I don't care about treasuries. How did this go in? NBA mortgage apps. Just take a look. It's a black dot, so not that crucial. Are you surprised? No. Yeah, but purchases. This is very typical. This is very typical. Refinancing is drying up. People want to jump in. Those on the fence are moving. Why? Bond market. All right. Jolts tomorrow, but that's a green dot. I really look at, well, I do look at some greens, but all the reds. And then you have PPI on, which is a producer's price index. And of course, we're going to do consumer sentiment too. Let's see what they're looking for. This is Friday. You can get Econ a day. You could get to, this is what feeds Bloomberg. There's also Market Watch. Okay.
Oui,
If
moi-même.
you're new to trading, you've got to watch Econ Calendar.
Bien, merci.
Reminds me, oh, Jesus, I missed that. Yeah.
Oui.
Yeah, I forgot that. Okay. 1993. So whatever that is. 28
Certificat de
years
quoi?
ago. Is it that long? No. 93.
Oui.
Yeah. Hi, Elliot. Welcome. I trade my
NBALTHAZARD.
I didn't even know about, I knew there was PPI. I had no idea what it was about. My head was handed to me. I was down in the 10% in the first day. Usually, in most places, you get fired. As a portfolio manager, it was futures and it was brutal. Of course, I owned it. Somebody fired me. I did have a couple of investors got a little upset. Within a week or so, I called back. No, within 3 weeks, I called back. It was because I was just shocked and also never had hits like that. So trading options and stocks are very different. So PPI is going to be on Friday and 13.426. Okay. Wow, this is what the problem was. Let's see how it comes in. Still a big wide range. Yeah. Consensus 2.6. Yeah, we'll see. We'll see. Okay. All right. Baker Hughes, I don't care. That's not right now. Yeah. Okay. Good there. All right. Now let's go on to chart price. Okay, timer chart. We're at 0.6. We had a very nice run up yesterday. Also, the day before. I'm saying, not day before. Friday was a huge day. Huge day up of 3 sigma. Stuff 90 handle at some point. Huge range. Somewhat muted. Still up on Monday. They're very strong yesterday. I do believe, and I've been saying it, I've been pounding the table. Those of you who watch the webinars, you'll see, or read my writings on PMT, that we're going to make it even higher. But it has been unsettling because look at the vols. Also, we're going to get into vols. You're going to see it. Also, if you look at ATR. The other day on, I think it was Monday, we had an 82 rating on ATR, average to range. For 5-minute charts, use 6 to 7 bars. So you're looking at, and this is after the more, after 10 o'clock. So it's like taking your reading after 10 o'clock Eastern, 10:05 Eastern. So it's 5 or 6 bars. I'm saying 6 or 7 bars, 5 minutes each for ATR. ATR is recommended to use 4 to 6. That's a little bit of slower pick for our application. But just looking at it as a benchmark, keeping it score within your mind. These are hard to do. There's a lot of tips inside. In one trade yesterday at 340, I gave back everything I'd made that day. Yeah. Very, very disappointed in myself, not in the market. Market is volatile, always has been. A little bit maybe more than before, but it's very, you gotta be extra careful. All right, 2 good reads down here on the low side. Not technically launchpad mode. I can't say that about Nasdaq. This is a launchpad mode. Where is that? Why? Below 300. Look at 373. So this point was 373 right there. That low. This is launchpad mode for Nasdaq. How do I get that? So if you I mean, he was a member of trading group. I notes, and of course, he lived down the street. Old part of Beverly Hills. And so in California, very good man. What I learned from him was that negative 150 and below or above 1, not 100 in the books. let it go a little bit further. If you get to negative 300 on the downside, not see the upside. You don't see upside on 300. Downside, you don't go to fear, not decrease. That's a large pattern. That's my explanation of it. It will rally very hard. Space and missiles and aircraft comparison. Like a large pattern. But we get 372. Okay. So far, we have only seen one day. Now, just now, it was another strong rally when the approximately 20 minutes ago. So, we shall see how things work out today. CIs are beginning to rotate. You can see CIs getting less and less. You can see cost possibly coming up. This is already in green. That's even poised better. And look what we saw in restaurants. It's just really the 6 moves very slowly, and we're above the buy area. So not necessarily great time to get in, but I think there's a little more upside to it. Right? Let's jump to Canary. New highs down today. New highs on transportation. Not a new high on Russell yet. Okay. Now let's get into more detail. The D-trenders. Okay. D-trenders are going to give you a little better picture. Again, difference between the price and last price versus last MAs for 50 and 200 days. Okay. And as we discussed last week, those of you who watched it or you attended it, we said you got to watch transfers. If it does, market is going to rally. It's going to be strong. And true to form, that has happened. Now we got to get some Russell in there. Once Russell tries to hit new highs, maybe match it up. I think we took some air out of the index because they were kind of overloaded. So, hi Mark, how are you? Hi Ravi. Anybody else just joined us? I know. JR, I know we do. Hi Fred, how are you? And I guess I must be Elliot. Hi Elliot. You're welcome. So that's where we are. Now, where's the count? Count is negative, almost got negative and 2. So at one point, we're about 3 negative. I do a scoring count on the D-trend, 3 out of 8. And now it looks like it's only going to be only 1. That's negative versus 7. The alarm part of this thing was when we're up here. Well, let me show you. This is where it was alarming, this area. Okay, we're way past that. Actually, take some air out of it, and it made us caught up. But this is where it was really, vulnerable. Because when the numbers get that high, it's similarly on the trader for Russell at one point hit 40%. This is huge. This is absolute. Of course. That's the last time. Last high. That's all time I put in 2318, I think by middle of next week. Should be going there. Now, keep in mind on the calendar, March equinox, may have missed that too. March equinox is going to be Saturday. That thing's like we saw a beautiful one the following day. This was 22nd was last year. Was on Sunday night on Global. That was the low. Because the 20th was Friday. Nothing happened there. And then, of course, the low on the cash was on Monday. But the futures low was put in Sunday night on YM Dow futures at 18,086. As you know, we showed that the sucker February 12th. And you're going to be, we gave 2 targets. Well, price only for 14.8, 21.7, 18,000 and 14.8. How do you come up with those numbers? 21.8 was the low, or 21.7, I forget. It's the low of March, of Christmas Eve, 2018. 18,000 is when Trump got elected. That was the weekend before the low before the election, which was the weekend, like last weekend of October. And the concept there was Masters of Universe. The hedge funds were going slapping his business. and they knew. Edge guys knew we were back. And back then was clear to a lot of people, and people laughed and joked about it, including at me. But we'll see who's going to have the last laugh. 14.8 is at 50% retracement. That's a key number from the high. Again, all coming out from 29 from up here, from this level. This is the level 21. I'm saying 29 6, I believe it was. Yeah, 29,568. Yeah, that was it. Yeah, 50% retracement. So, anyhow, hi Mark, how are you? So that's what we're on the PMT. Okay, SP1 Momo quickly. SP1 is in 1 plus 1 plus 5. I would say single channel interest relative to itself. No signal here. It's not too extended up or down. It's not as overdose down there. It's a smaller brethren that moves faster and quicker at +1, which is very neutral. Nothing. You want to look at near 10 or near negative 10? Not there. Now, we did have a high reading here. This is number of W. That's $52 Whiskey Hotel Sierra Papa. That's number of new highs in the last 52 weeks of the S&P 500. So S&P 500 only, not the whole universe, just the 500 names. But you have a 52 weeks high and 50 weeks low. This obviously is going to be very low. But here we're looking for a peak. And if you go to weekly, you get a better perspective. That could be a signal of topic, but I'd like to see it around 140. If we get another 140 here, then I think we're petered out. We're slowly getting ready to roll down. Okay? Which brings us to the next issue. Let me go to the issue. This baby gave a signal back in December, I believe, 13 maybe? 17. Okay, yeah. December 17 gave a 3 sigma signal. 3 sigma, that line. Not 4, 3. Unlike the prior year, we give us a right there. Then I knew how to show this market. I didn't know how far it's going to go. But I knew this was a 4 sigma. And that was December 13. I don't believe even if you watch, that's like 60 minutes. Or probably what have you. Hold on 1 second. Hold on 1 second. Nancy, I'm a little bit. Somebody has the open mic. Please do not do that. Huh? Hold on. Pardon me? Okay, I got it. Thanks. Please do. This is a one-way broadcast, guys. Okay. This is a morning brief. We gotta get things done quickly. Thank you, Elliot. Yeah. Please adhere to the rules. Thank you. Yeah, I'm sorry about that. I have no idea. I couldn't hear him here. That's my problem. Sorry about that. Well, that's what these messages were. I'm sorry. 1 second. Okay, sorry. I'm sorry. Yeah. Somebody's mic was on. Okay, sorry, guys. Yes, there were messages there. Thank you, Susie and Nancy. Thank you. I'm sorry, I could not hear. Yeah, I don't hear it on the system. I don't know why, but you heard it, not me. So it happens. No worries. Yeah, he wasn't. I don't think he was intentionally speaking. It was an open mic, so no worries. All right, let me go to SQ. This is crucial. So we have a trend signal that goes back in December, I think 17. This says we're going to see a low, about 8 weeks to 10 weeks forward. There's no exact rule. This is the tail risk of the deep in the money. I'm sorry, deep out of the money SPX options, not SPY, SPX. Okay, what's the distinction? SPY is mom and pops. Okay, I do that. You do that. We trade those. my client's trade. SPX is really for the it's safe, not safe, but it's really out there for the bigger boys to trade in. And so that issue is one to be cognizant of. The tail risk is the low end. It's not. It's you have two tails in a bell curve. This is the low end. This is designed for that. It's basically saying once we get over 140 to around 150, it's a possibility of a risk to a downside because we're just too giddy. Everything is too good. So these guys buy out of the money as a protection, and they're not buying a little bit. It's not necessarily tradable right then. What they want is a deep move, and they make a whopping return like they did in last year or in 2018. Well, yeah, December 2018 or March of last year. So we just got to be cognizant of that. We did not get to 159. That was a big number then. That was a huge number that was put in for December. No, was put in August of 18, which led into the December low of 18. Last year wasn't that bad. It was there, but here's the reading. It hit that's all-time high. Hold on. It hit 144. This 159 is all-time high beyond design limit actually. So let me come back here. Okay. All right, now. So long story short, we think some of that pressure to the downside is eliminated. But we can't rule out, nobody can rule out that, hey, we're going to rally to new highs and new highs and new highs. Why? Even the fundamentals of the story are even better than before. This COVID plan, and I'm a Republican, I know it's expensive, but if you don't hit it hard, you're going to get into trouble fast. That's going to be very helpful. You also see the vaccines coming in. That's a bigger story. And for example, in my area in Florida now, they're accepting the lower age. They're expanding the age limit range for people who qualify, especially with those existing conditions. Like I have psoriasis, so I qualify. These all point to the right direction. I think, well, travel is a little bit too early. We still have to wear a mask and social distancing, but just be careful. You can see the light end of the tunnel. That in itself brings the animal instincts, or spirits, I should say, and we'll jump in there market-wise. So you're going to see a rise up. You're going to see new highs. Whether we're going to contain it and move forward, again, we have to go back and say, okay, what is our, what's the catalyst? And that's what we're going to be on the watch for. That's what these meetings do. Try to bring alert to you instantly, okay? All right, VIX and VXN, we have pulled back quite a bit. This is today trading. As you know, VIX trades early in the morning. So this is today's value. We're still around fair value, which is 23. I suspect that we're going to get that mitigated more, but I like to see about 16 area right now at the new high. If we get that new high there, I want to see us to 16. That defines to me definition of normal, and we're not there yet. No, I mean to me this is a whole lot. This is the COVID premium. That's what I call it. Remember terror premium on the oil prices? Here you have COVID premium, so it's high. Again, we'll look at also the oil VIX for NASDAQ and also for Russell. But they're all elevated. Compared to themselves, they're all elevated. If you go back, you get a better picture here. You could see historically where we've been. This is last year, by the way, last March. Yeah. Okay. Now let's go to trend. Doesn't matter. Let's go to TD quickly. All right, we're at 57 and SP2 are probably the oldest and longest true and tested indicator. We're at 57, which is neutral. Anything around 50 is neutral. You got to be a little bit later what's going on around 75 and above. If it gets to 90, we're done. We're done on the run up. Cash out, sit back. Maybe look for a short, maybe not, but at least on the longs, pare it down heavy. We're done. Same thing on the bottom. If it hits below 20, look at this baby. It's time to go. It's time to rotate and go up. Now, this was in November, and you saw the launch pad. Just went to new high from that. I remember this. This was incredible, absolutely incredible. So, what day was it? It's 10:30. Yeah. Basically, it was discounting the. This was the AP report on Biden, and we had a huge run up on that Monday. I remember that's the weekend. But basically, this was discounting the elections. Remember, markets discount the future. Why? Because historically, in aggregates, that's the keyword. Markets are right. Not the individual person, not you and me, or even let's say Soros or what's his name, Druckenmiller, or I forgot the name again, Robertson, Julian Robertson. These are key players, but individually they could be wrong, but not in aggregates. So, all right, treasuries. Again, our line in the sand was 1.1. We crossed that back in January. Yeah, this should we cross that for a 10-year 1.1. 1.0. I'm saying 1.0. We crossed that. We're at 1.5. This is it's very small amount, but percentage-wise, it's huge. So it doesn't make it that much of a difference in our balance sheets. The interest expense is not that much higher, and interest income for the net savers are not that much higher either. But it's good, makes good copy. All right. So I'm not too worried about it, but keep in mind this could be a beginning of an issue. And if we keep on rising, now of course the front end they're keeping it low. The Fed has control over there. This is your cars, this is your mortgage, this is your insurance, long-term insurance assets. So they're going to be more expensive for all, but not at the point where not to make a difference, not in my opinion. Wait another 3 months, 6 months from now, then we have to regroup there. Okay, that's that. Reg FD, I am in a friends and family are involved in this name. Yeah, let me take this out. Yeah, that's gonna throw you out there. There we go. Not saying you should go in there. I have no claims where this is going to be at, but we have accumulated quite a bit from 5 and change. One of my buddies went in at 10 on this day. Was it 25? I think. No, what was it? It was one of these that opened up at 10. I mean, just rallied up to 10. I'm saying, not 23. I forget. It's one of these days that it jumped to 10. He bought calls there. He's new to options. He was trying to impress me. Don't impress me. Impress your bank account, your trading account. What are you doing calls here? These are cash only. Hold it 6 months minimum. Why? This is pills for coronavirus. Remember, we have 8 billion people on this planet. And if you're going to be any travel, everybody got to get vaccinated because we intermingle from domestic to international. And the airports coexist for both groups of people. It's going to be very, very dangerous out there if we don't. So a lot of those people don't have that kind of money, they don't have the refrigeration, the shelf life, that restrictions that the liquid vaccines do. This is the pill. If the second stage trials, they're 60 days away from decision from FDA. No promises, but if this thing flies, this is going to fly. It's going to add a digit or two to it instantly. Instantly, yeah. At least I expect a 40 to about 100 range. Okay, I've never done that, but this is the one time. Again, on these stocks, they got to be extreme story. That's what we've been doing. But we've just been to pick up some positions there. All right, here we go. And this is for those who can totally gamble it. Is it totally? You assume you're going to lose all of it. Yeah. And we're buying it into four stages, like 25% each, like every other week or so. Okay. As we see that week, we see a new low, we go in. Boom. So small amount, divide 4 ways, go in 25% each. Okay. Percent of stocks above 200-day moving average. We're pulling back up. No signal here. We have not crossed 75 area that we talked about, and I would be really, really worried at 55. But we have not. We've held up above that. The separation is what you want to look at. These two moving averages. This is nothing new. You've watched me talk about this since 2009. And then right now there's no divergence here. It already pulled back. There were divergences here, but we're going up on the price and not the This is a scoring indicator. This comes at the end of the day and it's updated about an hour after the market close. Okay. All right. Let's see quickly. Overnight. This is overnight. This is what we have done. Hold up. This is an indicator. Overnight. Oh, hurry. Okay, there we go. Wow, nice move there by S&Ps. 162 here. Very nice, very nice. Very, this is an expensive webinar I'm giving you. I should be trading. Huh. All right. Very, very nice. As you know, I run a small fund. Okay. Archives were posted. Excels. Here's what we worked on recently on the, what do you call it? By the way, this is the view of our fractals on that big machine, not here, which we look at. Remember, rolling over. One more thing. Remember, tomorrow rollover starts at CME for going to the June contract. So H21 becomes M21. M as Mike, H as Hotel. So Hotel 21 becomes Mike 21 for the indices. We gotta wait until the 12th. We'll do it on the Friday. We always have. Wait until the second Friday of the third month of the quarter to roll over. Why? OTF works on block trades. It needs to see those blocks. If you look at volume, you see there's very little blocks there. The volume itself is waiting to roll. Late Thursday night, early Friday morning, the crossover happens. It could be as late as first hour of Friday. It has, like, ES rotates first and then NQ. Okay. This is what we're working on, and these dots are amazing. These are ATR dots above our proprietary DMZ. We're going to do a webinar on that. Okay. Any questions for me quickly? It's 9:13. We want to wrap this up and get it into post-processing. Again, I apologize for that open mic. I did not see the messages. Next time, I'll be more careful about that. But yeah, it was not intentional. Thank you all for attending. Again, on Wednesdays, we're going to do it open. We're not grabbing emails, nothing. Just make it easy for you to come in as fast as possible. Okay? Have a good one.